Good morning, everyone. Let's kick it off. All right, so we had another night of a bit of a tester. Early in the session, you can see there that we really tried it down toward the middle of the night, toward flatline after opening up about 30 odd handles on the S&P. Literally just drifted down, marched down. I think at one point I saw we were only up about 5.5 points in the S&P future. It really looked like it had the potential to turn down and get lower. You kind of always had to make the market a little bit nervous. It never gave us that full test though, and it was I think it did that because, for the reason that everybody was just so nervous. No one was a believer, and so that's why it actually went last night. We did 4.25% in the Nasdaq, which is just massive. We did 3.9% in the S&P, so it's the biggest rally that we've had since, if I'm not mistaken, 2011. It's a huge potential dead cat bounce, or maybe we've already found the bottom. So that's obviously the question that we've got to answer in our minds. So a couple things that we can point out is catalysts and I think important things that were on the day. We had one of the Fed voting members, New York Fed President Bill Dudley, which came out yesterday and said that the current state of the economy, things look less compelling for a rate hike in September than they did before. Obviously, I think he's throwing out a little bit of what's happening in the rest of the world as well, not just in the States, and so that's put a little bit of a kink in things there. When you also have a look at when you also have a look at the durable goods number, which came out yesterday, was also a really solid number. So we talked about this yesterday and in the morning call, and there are a lot of really solid data points that have been coming out, not just in the States but also in Europe, and you combine that with the fact of we've had this big sell-off in the market. Potentially the Fed kind of comes off, and all of a sudden, China's looking a little bit more secluded. I mean, I do personally think that China will have a big spillover into the global economy at a point. I really do. But the fact of the matter is that the data still looks really solid, and guys are going to start to, make the case that the economy is still there and the economy is still really good, and want to present it as a buying opportunity on this pullback. All right, in Asia overnight, we saw a really nice bounce pretty much across the board, mostly up over 1% on everything. Hang Seng, nice recovery, 2%. Shanghai, last I looked, it was actually closer to flatline, but maybe it's bounced back up to 2%. But bottom line is it was a solid session overnight. We did have a bit of a reversal in commodity prices, or in the oil price last night after oil inventories. We got over $40 on light sweet crude. We're shade below that this morning, about 25 cents below that as we speak, and that's going to be one to really watch and pay attention to this morning. So like I said, we get oil back above 40. All of a sudden, a couple more bullish things happen there. It could really potentially stoke the fire for a bit of a rally in oil, and I think that the market needs oil to go to rally because of what we talked about yesterday, all of the high yield debt that's attached to it, that has the potential to default if we don't see a bounce in oil. All right, chart of interest today. So this is showing VIX peaks. All right, this is by Charlie Bilello. This is rolling 5-day percentage change, and you can see here how big the spike is that we're seeing right now. So outside of 08 and 09, which I actually got caught, I was shorting at $83, I think, on the VIX contracts, and I managed to get squeezed out. Bottom line is that there hasn't been a spike, a 5-day spike bigger than what we've seen outside of 2008 and 2009, going back for the last 20 years. 25 years. That's incredible, and I think that this is very, very telling. So what we've got to expect is probably volatility to drift back lower, and for us to really settle out here. We don't expect volatility to just fall over, but we'll probably the volatility will come down a little bit. We'll probably start to see, the 50-point moves in the S&Ps come back to 30-point moves or 40-point moves and that sort of thing, and it'll continue to drift down. There will still be big days, but not to that extent. All right, we had the Massmart out this morning looking relatively solid. Slight beat from the guided numbers at 123. I say relatively solid. The guidance before was terrible, but from what guidance was a couple weeks ago, they look relatively a shade better than that. Then we also have Woolies out. Woolies, looking more or less in line in HEPS and in revenue number. Divvy per share looks like a bit of a miss though. All right. In terms of market data today, we had nationwide house prices out of the UK, which is it's not an event. We have M3 money supply out of the Eurozone at 10. Then we've got a bunch of data in the States. We've got GDP annualized quarter-on-quarter, GDP price index, initial jobless claims, and pending home sales. So it's quite a big day for data in the States. We're going to have to wait and see what happens here. But this is definitely a big day for data there. Keep our eyes peeled for a potential move on the back of that. Yesterday we did see yields on 10-year treasuries really climb back up after the durable goods orders came out, and so we can also see another big impact there today. It could influence the market a little bit. All right, let's get into the maps. So I was going through a handful of things earlier to look at, and I found some really interesting stuff. So yesterday, if you didn't see, I'm trying to think of the name of it now. Schlumberger came out and they bought, I can't remember the name of the company, began with a C, but it was a $14.8 billion deal, okay, in the energy sector. All right. It was a 56% premium to the share price going into yesterday. It was like a 37% premium to a 20-day moving average of the share price. Okay. The day before that, we also saw AGL Resources, which was also acquired at $12.8 billion valuation. So these are two big, big M&A deals in the mining and energy space. We haven't seen one in forever, and obviously, these guys are coming and they're looking for, they're picking a bottom here. They're trying to say, okay, we're getting deep discounts on some of these companies, and at those prices, we're willing to take on the balance sheet risk if we're a strong enough company, and this is the best time to do it. I genuinely, and when that deal came through, we saw a big rally in some of the miners here. That rally faded hard on the U.S. session. But that being said, I think it's very important to take note of. It's something that's very important to think about. And I'm going to show a couple 10-year charts associated with a couple of these things. So I'm going to look at Anglos, for instance. On the 10-year chart, look at this thing. Right back down exactly to where previous lows were. We tested $133. That's exactly where the lows are. Yesterday we closed at 34.5 in London. It's a full retracement and testing of that level. It's a breakdown of this head and shoulder that we saw there. Even more fully to the target. Even further down to the target than necessary. But this is a full retracement to the 2008, 2009 lows. I think it's very, very interesting, and could, in hindsight, prove to be a major level. I'll show you another one. This is Freeport-McMoRan. It's the largest copper producer in the world. No, sorry, I've got a weekly chart here. It doesn't look the same on the daily. Anyway, the bottom here is also exactly the same. If I can get a daily up here, I don't think I can get it. Just give me 1 second. Let me see if I can conjure this up real quick. Daily. I'm going to go back today, and we're going to. Okay, I'm just going to go back all the way. I'm going to go back 10 years for you here on a daily, so you can see this one more accurately. Sorry, I'm getting there. Got to at least get through the 2008, 2009 downturn, and you'll see that Okay, so oh, that's quite weird. Anyway, just take my word for it. I was looking at it on the charts yesterday. I don't know why it's not coming up properly. I think it's still giving me the weekly setup here. Bottom line is that it's also bottomed out at the exact same levels. I was looking at this chart yesterday. Um, and and you can see that these stocks, a couple of them, they're coming back to these same sort of levels that they were at in 2008, 2009, and I think that that is very, very important. The fact that we've had these two M&A deals in 2 days is also hugely, hugely important. So just keep that in mind. We'll have to see if that means anything, and if you start to see that a little bit more sector wide. But just be careful on the mining shorts. I know I've been freaking saying, these things are, short the bounces, short the bounces. I'm starting to think that the risk reward is definitely on the long side in these things now. Personally, I'm long. I've started buying the last few days, and it hasn't worked out as of yet. But the bottom line is I think there's potential catalyst there, especially if the market could start to hang in. All right, next one we're going to look at is Barclays Group Africa. Okay, so dropped out of major support here. You can see very, very clear-cut support at support resistance line at 174. So drop support, what was support now becomes resistance. Yesterday we topped out at exactly that level, really failed it. This chart doesn't look good. I mean, if you back it out a little bit, I mean, it just doesn't look good. There's nothing that good about it. So we've dropped major support, and I think that until we get above 174, you don't want to be long at this thing. It has the potential really to trade down to about 150 bucks. After the GDP number a couple of days ago, that sort of thing, potentially, also some negative catalysts around. I know there's a big divvy coming there in the next few days, but it's just something to think about. Definitely doesn't look great on the maps. All right, next one we'll look at is CFR. CFR, you can see here, kind of right around the same sort of level that it's bottomed at every time. So you can see the wicks are a little bit lower, down closer to the 96 level, but 96, 97, somewhere in there has been the bottom end of CFR for, going back basically the entire year. We've bounced off of it time and time and time again. It kind of plays around in this, 12 to $10 to $12 range. So, sorry, 10 to 12 rand range. So we'll keep an eye on it here in the next couple of days. We start to see a reversal to the upside. Might be worth hopping on the back of this one as well. And then the last one that I'm going to show here is Sasol. So Sasol really came down, bottomed out more or less at the same levels that we did before. Somewhere between 360, 365. So we spiked down there 3 days ago when we made the lows after the S&P was down 140 points pre-market or whatever it was. This is going to be interesting to see how this plays out. Is this a double bottom here, or is this is this a continuation pattern that's going to break? I mean, if it is a continuation pattern that breaks, that the price, the target lower is going to be huge. I mean, it'll be down to about 250 bucks. So just watch this level very closely. I think a close below 365 or intraday trade below 360 in Sasol, and this thing could get messy. Just keep that in mind over the next couple sessions. Maybe a little bit of resistance around this sort of level where we break down from the other day, which is about 400 bucks. And that's it for today, guys. Good luck out there.